Good morning and welcome everyone to Market Times TV. This is Shaurya and now we will discuss the happenings of global financial markets and also commodities market as well as currencies market. Today, markets are trading quite up as there is hope of positive trade deal finally coming out, and good economic data was there from US and China on Friday, so that is still giving momentum to the markets. Now, if we talk about indexes right now, then Sensex is up at 0.56% at 40,387, while Nifty is up by 0.6% at 11,961. Japanese market is closed today due to holiday, while Shanghai is up by 0.75% at 2,980. If we talk about Friday, then US markets closed with a gain of 1.11% at 27,341. S&P 500 also closed with a gain of almost 1%, or if to be precise 0.97% at 3,066, while FTSE closed with a gain of 0.75% at 7,302. So if we talk about political factors right now, then there will lot of focus on US-China trade war, impeachment process and US elections, while any certain actions on Middle East can also have a huge impact on geopolitical tensions across the world. Now, if we start with impeachment process, US House of Representatives have given a go-ahead for impeachment process with 232 votes in the favor. And impeachment process is going on for the case that Donald Trump has blackmailed Ukraine for looking into Joe Biden and his son, who has links with gas company in Ukraine. Till now, all the investigations has happened in the private, and this process can finally lead to Trump getting a trial in the Senate. Since till now all the investigations has happened in the behind closed door, so market has not reacted that much to this news. But when the things will be made public, markets will be much more vulnerable to the developments, and moreover, if and when there will be probability that Trump might get impeached, and that will increase, so volatility may rise up substantially. While if we talk about US-China trade talks, then both the sides have stated that they have made progress in high-level talks on phone on Friday, but since Trump is adamant on China buying $50 billion of agriculture goods, and issues whether December tariff will be cancelled or not, and whether this will become bottleneck or it not, it has kept markets quite fuzzy. And at the same time, the venue in Chile also got cancelled, so markets are quite nervous as they feel deal might be off. And this is clear by the response of Bloomberg's report got that Chinese officials feel that Trump might be impulsive, and due to that deal might fall. Now, this is not a huge news, but given that it touched the deepest fears of market, it reacted quite negatively. And in what was quite otherwise good week last week, markets went down on Thursday due to this news. And if we focus on Euro area, then there will be main focus on UK election campaign, and UK election campaign this time is moving around the Brexit, where Boris Johnson and Conservative Party is asking to back him so that he can break the Brexit deadlock and get the Brexit done, while Liberal Democrats are campaigning #Stop Brexit, whereas Labour Party is like, we are not focusing on Brexit, we are focusing on other issues which are more important for the economy and social situation in the UK. Since this election will revolve around Brexit, so opinion poll for the party will influence the probability of Brexit, and markets as well as pound and euro will react accordingly. Now let's look at the economic data that is supposed to be released this week. For US, there will be factory orders and services PMI. And if we look at Chicago manufacturing PMI last week, it fell to 43.2 for the month of October, which is lowest since December 2015. And services PMI will have the maximum impact on market this week, while initially global markets have reacted to good jobs report from US, where 128,000 new jobs were created in October, while expectations were of just 75,000. And numbers for September as well as August are also revised upward. While Fed's decision to not increase the interest rate unless there is good uptick in inflation also gave a good boost to the market, and while it acted actually negatively for the dollar, because rise in interest rate and value of the currency of that country has a direct relation. For European area, finalized figures for manufacturing and services PMI will be released, while its composite figures for the countries and Euro as whole will provide maximum impact, but factory orders and industrial production from Germany along with retail sales data from Europe will also impact the direction of the market and Euro. In UK, it will be PMI figures along with Bank of England meeting that will keep investors on their toes. Now, market is not expecting that Bank of England will cut the interest rate, so in that sense, market won't react. But just in case if there is a rate cut, then that will be taken quite positively by the market, because market is not factored in the rate cuts. And beside this, election campaign will also create a lot of buzz and volatility. From Asia, PMI services data will be released from China and Japan, while retail sales figure from Australia will also be come out, and Australian Central Bank is also meet this week and they are not expected to cut the rates. And PMI services data from India is also supposed to be released this week. Now, if we talk about Indian markets, then Indian markets are quite good today, and this week their focus will be on earnings report of companies like M&F, SDFC, Titan, PNB, Eicher Motors and Tata Steels. Whereas, as per the experts, bank stocks like HDFC will report a good performance, but PNB and PSB banks can come up with a loss due to deferred tax asset. Now, deferred tax asset is a tax paid for the first time, and ahead you are paying tax ahead, and since you have paid tax ahead, it is an asset. But now tax rates are reduced, so there is less provisioning needs to be done, and if you have paid ahead, so there is less need to be paid, so that is considered as loss. Now, this is the reason why PNB banks may come up with a loss. At the same time, auto stocks like M&M and Ashok Leyland is expected to come up with a loss due to weak sector outlook for the auto. Now, it is reported that auto has finally started to revive due to consumption revival in the month of October due to festive season. But it is important to note whether this revival will continue in the month of November and December and so on. Now, beside this, if you look about overall earnings report, this quarter has been quite good, but there has been reduction in corporate tax rate, and that has helped the company come up with the good profits. But some companies have come up with a loss due to DTA, but overall performance of company was good, or we can say at least satisfactory. At the same time, foreign institutional investors are also come up with the inflow, while there is hope of tax concession by the government for its equity sector, and that is also going well for the market, while at the same time there is perception that economic condition of India is finally reviving, and that is again going positive with the market, and that's why on Friday market ended on a positive note for 6th consecutive day. While profit bookings now can be observed for some time, and there might be some correction in the early days of week. However, today we have not witnessed it, but it can happen in a day or two, and after that we might see markets going to new high, because beside all these good fundamentals that is being hope of getting in the future, FIIs and foreign institutional investors were also net buyers for the month of October, and as per the source they infused more than 8,500 crores in Indian markets on October. While if we talk about economic data that was released, it was not quite good in recent times, as core sector activity of 8 core sector fell by 5.2%, and PMI fell to 2-year low at 50.6 last week. But markets will now focus on non-manufacturing PMI, and regional comprehensive economic partnership meeting will also be in focus, where 16 nations including India will meet and discuss about the trade, and if India will join, then it is considered that this won't be beneficial for India, and this might affect markets in the negative way. While if we talk about trend ahead, today markets have started on a high note, and after positive remarks from trade war front and good US and China data last week. Now they might remain this way, but PMI data from Europe may change its direction, and given that it's earnings week, so earnings from a particular countries and particular stocks may also impact the markets in a negative way. Now if we talk about oil markets, today oil prices are a bit down, as Brent was trading with a loss of 0.47% and 61.4 per barrel, while WTI is trading at 55.94 per barrel with a loss of 0.46%. Last week they ended on a good note after great economic data, but as we have seen that there is a quite leak in the oil pipeline through which Canadian crude oil reaches US Midwest, and due to that TC Energy Corporation closed its 590,000 barrels per day pipeline as per Reuters. So all this gave support to the prices, but today we have seen there's a fall in prices, as at the same time one front we have weak manufacturing numbers which is impacting the demand, and secondly there's a good production from US and OPEC plus, and that is again not going well for the supply. Now manufacturing index so fall in demand, good production so increase in supply, and result fall in prices. Now if we talk about gold prices, they actually fell a bit today with the good economic data from US. Now but even after that they have maintained their position, like they fell last week on Friday, but today they have maintained their position at $1,515.2 per barrel, while silver is also trading at $18.125 per barrel per ounce, and even though there was increased risk appetite, the dollar index has fell to 97.215, and precious metals got a bit of lift due to that. Now if you talk about this, besides stock market are witnessing quite a rally, and Fed has decided to cut the interest, decided not to reduce interest rates further unless there is a substantial slowdown in the economy. That's why gold prices may witness some correction and profit booking, but given political uncertainty and slowing in economic condition, bullish trend still persists for the gold prices. But if you talk about bonds, then bond prices have seen quite a fall, as treasury yields from US have fallen after good economic data and reported progress from China and trade war. If you like the all the video, then click like button. Don't forget to subscribe the channel. Also click on bell icon so that you can get notifications whenever we release new videos. And for getting more videos, stay with us. Thank you. Bye.
आपको अगर हमारा वीडियो पसंद आया है तो इसे लाइक करें, साथ ही YouTube चैनल को सब्सक्राइब कीजिए और मोर अपडेट्स जानने के लिए बेल आइकन को दबाना न भूलें।